And joining us, as he has been for this whole hour, is Tim Anderson, Managing Director of TJM Investments. We also have Bill Hubard, Chief Economist at Trade.com, joining us once again on the phone. Bill, I'm going to hand it over to you first. I have a question about the banks, particularly the European banks this morning. They're getting hit hard again. Huge declines on Friday, and we are seeing just as big of declines this Monday morning. Your thoughts? Yeah, very much so. And I think we're seeing Ashley Webster saying, oh, shoot, I didn't mean to say that. But ever since Ashley and I talked about a half an hour ago, the FTSE, the DAX, et cetera, have dropped another 0.5%. But the point that you're just saying is the two things, or the two areas of the market that have been hit all year long have been the banks because of low interest rates. And, of course, here in the UK, the key that we're looking at is also the building. But let's go back, if we can remember, February the 11th, because it looked like that day it was going to be the end of the world. And I wrote a report for a couple of the other channels I appear on, and I said, I think the glass is half filled rather than half empty. Now, let's just take two examples. Had you bought Anglo-American Resources on the 11th of February, you'd be up 197%. Or you'd bought Glencore, again, the mining company, you'd be up 142%. So it is going to be a question of, and as I mentioned earlier, because of the end of the month, end of the quarter, end of the fiscal year, and the long weekend ahead of the States, the key is going to be how much, of the bottom fisher is going to be looking at. But as Ashley mentioned, it's now the politics. And as I say, the reason we've dropped another 0.5% is David Cameron is having a cabinet meeting this morning. And I can imagine Boris Johnson, Michael Gove, David Cameron, Chris Grayling, et cetera. It's not going to be a friendly group of people sitting around a table. So right now, it's really the political situation. But the key is going to be is how afraid is the European Union, especially Angela Merkel and Monsieur Hollande. How difficult are they going to be dealing with the UK with some of their own friends behind them ready to pounce?
Bill Hubard, you're right on the mark there. And by the way, HSBC 9% to the downside. Royal Bank of Scotland down over 25% this morning. And so on. Barclays down about 20%. So we're seeing huge moves this morning. Yes. Tim, we also got the news that Moody's cut UK ratings overall. And now the worries just continue. Your thoughts?
Well, there's tremendous uncertainty over what will go on in negotiations between the UK and the EU, and those may not start for months. So it's going to be, the market's going to be challenged to deal with that. The market doesn't like uncertainty. It's the old adage is it can deal with bad news, but it doesn't like uncertainty. So that's going to be a real challenge. And we've really only been down for one day. So this could be the beginning of a little bit of a trend. I mean, it is amazing that the 10-year note yields less than it did at the lows in February.
I just want to know,
when that was a huge risk-off trade.
We did say that the 10-year note, by the way, 1.5%. It's also worth noting that the German 10-year bond has been at record lows, and the UK gilt, that yield plunging to a record low as well. So yields across the globe are now here at lows.
Right.
So Bill, my question for you is, do investors look at the U.S. economy and say, okay, it looks safer than most any place else? Does it make our stock market look more attractive? Yes, our markets are now negative for the year, but that wasn't the case before Friday.
Well, very much so. I think what you're seeing is basically, if you look at the currency flows, of course, the traditional safe havens will be Japanese yen and the Swiss franc. But as you just said, talking to a couple of friends of mine strictly off the record, both Friday and Monday, saying this could be, because I know, as Tim was talking about, are we in an earnings recession in the States? But one of the things, if you believe Fed fund futures, we've gone from a 32% probability that the Fed could raise rates once by the end of the year, now saying a 10% probability they drop rates. So if you believe in the safety of the dollar, the Federal Reserve not going to raise rates in 2016 or 2017, and you're looking for a safe haven, this could be a very, very incredibly positive move, a flow of funds into the United States stock markets.
Bill, we'll leave it there. Bill Hubard, Chief Economist at Trade.com, and of course, Tim, thank you very much.